Hello friends, today I'm going to talk about stock market because stock market is the hot topic right now. Why you should invest in stock market, what companies you should select to invest in stock market, and how long do you need to invest in stock market. Now, why should you invest? Stock market is one of the vehicles for your investment which can grow your investment exponentially to the extent beyond your dreams the capital can increase. That is the real. So you should not leave this particular investment vehicle at all. If you don't know, you have to learn it and see that you multiply your money. There is no question of ignorance at all. Anything can be learned and anything can be practiced and anything can be put in action for your own benefit. So stock market need not be alien to you. And people who are always afraid to enter because of the earlier losses are because they have invested at the wrong time. It is not that stock market is bad. There have been people who have lost their entire lifelong earnings in stock market and committed suicide. At the same time, there has been a section of people who have turned their amounts into millions and trillions by trading in stock market. Now, what is the difference between these two people? The difference is first the mindset, the second is the strategy. Now, what kind of strategies you need to adopt when you are trading in stock market? This is very important to be understood because if you don't understand this basic mantra, you tend to lose. And you tend to lose and the fear comes in you that you don't come to stock market at all for your investments. So now, every investment has got an element of risk. And because this is going to give you a very high rate of return, there is definitely a high risk also in this. But the risk comes with calculations. So if you invest your money scientifically and carefully, you will definitely earn decent returns, and in the long term, if you sustain this investment, you will really build a gold mine for yourself. So let's learn how to do this. First of all, the strong reasons of why you should invest in stock market is if you invest in good companies, the good companies will not only have their values increase, but also give dividends every year. Then it will issue bonus shares at regular intervals and it will give you rights issue. By the benefit of all these things, you will only increase your number of shares in the company. And when the value of the company increases on the equity shares, your number of shares multiplied with the value of the company will be really miraculous. Now let me take a couple of examples to make you understand how bonus shares issued by the company has turned people into not just lackey but crorepati's. The first company I would like to take an example is Infosys. Infosys has issued bonus shares 8 times in the entire career of Infosys. Had a person invested 100 shares before 1997, see how his shares have increased from 200 to 25,600. And for today's rate of Infosys, 25,600 shares multiplied by the value of one share of Infosys amounts to 3.3 crores virtually. So this has not just come overnight. This has come out of virtually 20 years of investment. So you need to be patient and you need to sustain your investment in such a way that it gives you long-term benefits, and that long-term benefits will transform into a gold mine in your portfolio. Okay, the same is the case with Wipro. Wipro has issued bonus shares 5 times in its career, and if you do the calculations of Wipro, you will also end up having crores in your bank account had you sustained from the beginning of 2004 to now 2020, which is around 15 to 16 years. And these years have issued bonus shares thrice in their career. Okay, like this, if you start investing in fundamentally good shares, I think you will accumulate a decent return in 15 to 20 years of margin of years. Now, let me go to the topic of which shares you should actually select. Now, this is not a rocket science for you to select which shares you need to select because there are already proven companies. The proven companies over the past 10 or 15 years of the track record has been exorbitant. It has been excellent, par excellence. So fundamentally good shares are what you should select in each and every sector. Don't try to concentrate on investing in only one sector because your risk needs to be mitigated by diversifying into various sectors like automobile, pharma, FMCG stocks, like IT stocks, and manufacturing sector. So like this, you try to diversify your investments. Now, which company you need to invest? Select the top 2 companies in every sector and try to invest in that. Now, how do you select those companies? Now, if you go to just Google and type out Sensex 30 shares, you have a list of 30 top companies. Start investing in those companies. Don't mind about the value, how much it is. Maruti like companies may have 7,000, 8,000 rupees as per share value. That's fine. Asian Paints have got something like 13,000, 14,000 per share value. That's fine. No problem. Don't be afraid of the number of shares you're going to get. 1 share a month. Get 2 shares a month. Like that, you slowly start investing at regular intervals. Your portfolio will grow in a matter of 15-20 years, just like unimaginable level. Okay, that once you exhaust 30 shares in Sensex 30, extend it to Nifty 50, which is an addition of another 20 companies from the 30 companies what I have already mentioned. These 50 companies I have mentioned at the end of the slide for your reference. Okay, now diversify your portfolio as well. So for these 50 shares, you need not see any calculations like accounting ratios or financial ratios to see how is the track record, what is the net sales, what is the turnover, what is the dividend payout ratio, what is the PE ratio. Though I have given all these things in one of the slides later on, you need not go through all these things. Virtually, you can invest blindly because they are proven companies. They can never fail unless there is a very, very rare chance like Anil Ambani's companies fail. Okay. How much should you invest? Invest in small quantities. Okay, little drops of water make a mighty ocean. Don't invest just in 1 share and then for 1 year you don't invest at all. No, take shares, have a strategy, take an Excel sheet and put the values of the shares. Then see how much you can afford to have an investment per month. Okay, then start investing in small quantity. Let it be 1 share, 2 shares, 5 shares, 10 shares. That's fine. So don't invest in all at one go in one company or all in one time, because the markets may fluctuate. Okay, then wait for the markets to fall. See, usually what the trend of the commoners are that when the market is falling, like some other day it has fallen something like 1,300 points, 1,700 points, people become panic and start selling off all the shares. This is a wrong strategy, and this is where people really end up losing. Now, when the markets are falling, be happy that it is an opportunity for you to buy more shares. This is how millionaires accumulate shares at fallen rates of equity shares. Okay, now accumulate the share at every fall so that your number of shares increases for that company. Invest regularly and systematically without a break with a clear strategy in mind on how much you want to invest and what are the shares you're going to purchase. Okay, share market investment actually should be like, as if you have lost your money. Don't try to see the markets every day and try to become panic or excited. You become panic when the markets fall and you get excited when the markets increase. No, this is not going to be your mindset if you want to grow a long-term investment. You need to really have the mindset, yes, I'm going to build a gold mine after 20 years. That's what your mindset should be. So invest, go on investing in it, because you would have seen 10 years back, the Sensex was hardly 2,500 or 3,000 points. Now it is almost, 40,000, 50,000 points where the Sensex is really standing. Can anyone imagine? So with every fall, wait for a fall to get more shares on the companies you are targeting. Okay, don't try to buy anything which is on an increase. When the market has increased 500 points or when the market has increased 700 points, never buy a share. That's the wrong strategy. When the market goes up, it has to come down for at least squaring off or at least booking profits by the brokers. At the time, immediately catch up that share. You will be able to accumulate at the correct price and then balance out. Now, how long should you hold this investment? I said, if you really want to make a big gold mine, it should be approximately 15 to 20 years for sure, which is minimum. Now to strategize that into goals, like, I want to buy a house. I want to accumulate my money for my retirement. I want to fund money for my children's education. Okay. So these are the specific goals you would keep for assigning to every share what you purchase. Suppose you are purchasing Infosys. Keep Infosys as number of shares you're going to accumulate for 15 years or 20 years for your retirement. Then invest in TCS as if you're going to accumulate it for your child's education after 15 years. Then in Reliance Industries, now try to invest in this as if you're going to purchase a property after say 10 years or so, virtually. Okay. Now, divide your investments into short-term, medium-term, and long-term. Don't try to get an overnight profit. This will be very short-term and you'll end up losing somewhere trying to have a miscalculation. Markets give massive return only on long-term, because rights issue and bonus issue, if you are investing on a long-term, will add to your shares, number of shares, and that will increase your portfolio size. Dividends are paid regularly year after year by top companies, which in the long run will even try to break even your purchase price. Believe me, it will break even your purchase price. So accumulate dividend in a separate bank account and see that how much dividends you are accumulating on company to company basis. Okay, then sell off some portion of your shares during interim if you really want to make your profits, or if you want to have an emergency, but don't try to sell off all the shares. If you purchase 50 shares, sell only 20 or 25. Keep the remaining 20. Don't completely square off your investment for the company, because the companies what you might have selected would have been a very good company in that sector. So try to have them for getting dividends, for getting bonus shares, and for getting rights issue. Okay. What do we do when the markets fall? See, this is a very important one which I just hinted a few moments back. Don't become panic. Now, when you're investing for a long term, try to have a mindset that your long term is your goal and not short term. Don't get carried away or become panic because the market is falling and you're losing your capital. If you sell, your portfolio is gone. But if you sustain that and start accumulating with every fall, then you will increase your portfolio and you will see immediately within the next month your portfolio has grown. Okay, never act in haste. Do opposite what the crowd is. Generally, majority of the crowd start selling of the shares when the market falls. Never do that. Just do the opposite. Start accumulating. This was the secret formula of Warren Buffett and even Bill Gates. Okay, accumulate fundamental shares which you have targeted at the beginning of your investment strategy. When in the peak, try to sell off some shares to earn your profits. The same share when it falls down, try to immediately buy at a lower price. This should be your strategy, how you should play with the stock market. Anyway, watch Sensex 30, Nifty 50 shares for your accumulation. Right now, how to maintain your dividends? I was just indicating that your dividends must always go into a regular account so that you track how much dividends you are receiving. Excuse me. How much dividends you are receiving from each company, so that you can have an estimation that these dividends can even square off your purchase price at some point of time. So anything which is accumulated over long term, whether it is shares or in dividends, will see sizable amount of profits which you have maintained. Okay. Now, what are the things you should watch in your portfolio? When you're started to purchase the shares in various sectors, see that you equally distribute it. Diversify investments so that all the eggs should not be in one basket. It's very risky. Now, what are the companies you select? So always select the top 2 companies in every sector. Okay. For example, in auto, if you try to select Tata Motors, also select Hero Motors. Okay. In pharmaceuticals, if you want to select Divi Labs, then also try to select Sun Pharma. So if you want to select IT shares, select TCS and Infosys. Like that, you try to select the top 2 companies in every sector, because they always have a competition between each other, and your market share, and with their competition, your value of the equity shares will increase. Actually, sometimes you need to dilute. Sometimes, what happens is we start accumulating because of so many recommendations from so many people. For example, I started accumulating banking shares like ICICI Bank, like Kotak Mahindra Bank, then HDFC Bank, then State Bank of India. So now your portfolio size on the banking sector is too much ballooning. So then what you should do is you should slowly start diluting that sector and try to diversify to some other sector where you're actually not concentrated. For example, painting. So paint sector. So Asian Paints, Berger Paints. So you try to invest on those sectors which you are not exposed. Okay. Then increase your stake in that sector slowly. Have a list of the companies you want to buy now and later on, and then regularly track it through an Excel sheet. How much you are buying, how much you are going to sell, how much you are going to rebuy it during falls, and stuff. By tracking, you will be able to really appreciate your investment strategy yourself. This is not a rocket science. It is not going to be taught in any college or school, but it is out of your own experience you are going to learn tremendously. There is one more angle to this which I wanted to tell you. Have you all thought of investing in a foreign market, which is New York Stock Exchange, or in US markets? People have become billionaires by investing in stock market abroad. Now, why I'm saying this is because now the 2 big banks, which is ICICI and HDFC, have started coming out with the offers for you to start purchasing online shares in the US market. US market is phenomenal. Just like Indian companies have top 30 and 50 companies which are fundamentally very strong, you have equally there in US some 10 or 15 companies which are fantastic to invest. Example is Amazon, Microsoft, then Elon Musk companies, then you have automobile companies, then you have Dell, so many companies where there are fundamentally very strong companies for you to select in the foreign markets, but your investment is going to be very heavy because that is going to be in dollars and your conversion is going to be heavily on the purchase of that. So with this in mind, try to slowly start investing in foreign markets, because in foreign markets your conversion itself will grow you very big. Apple, for that matter, has recently, announced bonus shares. I don't know how many people of you are aware of that. It has announced bonus shares, and people were hell in buying it. And now it has rebounded to its original price. See the amount of profit they would have made. And if you just offload those shares back to the Indian currency, unimaginable is the profit of it. So try to accumulate those shares slowly by slowly, like Facebook, Amazon, Apple, Microsoft, stuff like that. They are all very good shares, but it requires heavy investment. So these are fundamentally very good companies which cannot fail, because they are ruling the market, not ruling just the market, the world also. So try to start investing 1 share or 2 shares or 5 shares like that, and see after 10 years how much they are growing. And the dividends which is declared for those companies, when they are converted into Indian currency, they also become huge. One good example I will tell you here is Cognizant. Cognizant has been registered in the New York Stock Exchange. And why Narayan Murthy, Nandan have all become very, very rich is because the shares they have invested in the companies at New York Stock Exchange, and the dividends they receive every year will be very huge. Though we will not be able to invest in such huge quantities, we will slowly start by investing in small quantities and start reaping rich dividends on that. Okay, so this is what I wanted to tell you about the stock market in foreign country, that is especially in US. I'll give you a list of the Sensex 30 shares which I was talking earlier. What are the companies? 30 companies which you can invest blindly without even going through any of the financial details of their balance sheet or P&L accounts. Okay, these are the top companies. They just can't be challenged. Okay, some companies may have temporary falls because of some news here and there, but end of the day, they are fundamentally very good companies, and they are ruling the stock market for sure. The other 20 companies, in addition to this Sensex 30 shares, are these other 20 companies which you can start extending your portfolio for. So the list of 50 companies is what I have given you for investment. These 50 companies are the best companies in India, at least. Some of them are very famous for, because most of the financial institutions bank on only these shares. I'm not going to touch, as a part of this video, small cap, mid cap and all the shares, because you need to investigate a lot of financial details with them before you start investing in that. Right? So I have taken the top performing companies and I've recommended that to be invested. See, this is the mantra. Actually, you need to learn from what research people have done, from what historical performances the companies have made. So this is a very, very simple factor. I'm also going to give you a list of those financial and accounting ratios which needs to be taken into account when you are really trying to invest. If you want to be very, very detailed in investment and justify why you want to invest, right, you can calculate these ratios, and on the right hand side I put a benchmark of what exactly the ratio should look like for a healthy financial status in the health of the company, that once it is this, then you can blindly invest on this. I hope these are the details. So, if you like this video, please subscribe to my channel and hit the bell button. Thanks for watching this, and wish you all the best for happy investing and grow your investments with mind-blowing effect. Thank you.